Financial instability can strike even the most promising nations, leaving them grappling with debt, inflation, and economic turmoil. As we step into 2025, several countries are facing significant challenges, from economic mismanagement to global market shifts. These struggles have left millions of citizens in poverty, dealing with skyrocketing costs and dwindling resources. In this video, we'll explore 12 countries on the brink of financial collapse in 2025, uncovering the factors that led to their economic crises and what the future might hold. Let's dive in and examine the harsh realities of these struggling nations. Country 1. Venezuela. Despite having the world's largest proven oil reserves, Venezuela has become a textbook case of economic mismanagement. Overdependence on oil revenue, combined with rampant corruption and political instability, has led to a catastrophic collapse. Since the mid-2010s, falling global oil prices have hit the country hard, eroding its primary source of income. Inflation remains a massive problem, with rates exceeding 25% annually, leaving basic necessities unaffordable for the majority. Over 82% of Venezuelans live in poverty, and shortages of food, medicine, and other essentials persist. Corruption has further exacerbated the crisis, as oil revenues are frequently misappropriated. Humanitarian organizations estimate that nearly 8 million people need urgent aid. President Nicolas Maduro's administration continues to face criticism for worsening economic conditions. Despite occasional rises in oil prices, systemic issues such as corruption, lack of diversification, and political unrest hinder recovery. With a public debt of over $150 billion, Venezuela's future remains bleak, leaving millions to struggle in dire circumstances. Country 2. Argentina. Argentina has faced financial instability for decades, and 2025 is no exception. Known for its vibrant culture and natural beauty, the country hides deep economic woes. Inflation rates exceed 230%, eroding the purchasing power of its citizens and making essentials like food and medicine unaffordable. Argentina has defaulted on its sovereign debt multiple times in recent decades. The current debt stands at over $400 billion, with creditors wary of further restructuring. Poverty rates have climbed to over 50%, leaving millions struggling to make ends meet. While the economy shows occasional growth, it's often short-lived due to policy missteps and external pressures. Economic mismanagement, including high public spending and reliance on foreign debt, has exacerbated the crisis. The Argentine peso continues to lose value, further driving inflation. For everyday citizens, this means a harsh reality of stagnant wages and rising costs. The outlook for recovery remains uncertain, with many experts predicting continued challenges in the coming years. Country 3. Greece. Greece's financial struggles date back to the 2008 global financial crisis, and despite EU assistance, the country remains in a precarious position. High public debt, tax evasion, and inefficient governance are key contributors to the ongoing crisis. Public debt currently exceeds 180% of GDP, placing Greece among the most indebted nations in Europe. Wages remain low, with the minimum wage at just €830 per month, barely covering basic living expenses. Nearly 20% of the population faces poverty or social exclusion. Greece's banking sector remains weak, and economic recovery is hampered by low labor competitiveness and limited industrial presence. While tourism provides a lifeline, it cannot compensate for systemic issues. Government overspending, particularly on pensions and social services, continues to strain the budget. Tax evasion further undermines revenue collection, forcing higher taxes on the compliant minority. Without structural reforms, Greece risks falling deeper into economic stagnation. Country 4. Zimbabwe. Zimbabwe's economic troubles stem from decades of mismanagement, corruption, and hyperinflation. Once the breadbasket of Africa, the country has struggled to recover from policies that decimated its agricultural sector and economy. Hyperinflation reached record levels in the early 2000s, rendering the Zimbabwean dollar worthless. Today, inflation remains a problem, with prices rising unpredictably. Public debt stands at $21 billion, and unemployment rates are among the highest in the world. Many Zimbabweans live below the poverty line, relying on informal trade and subsistence farming to survive. Efforts to reform the economy have been slow and ineffective. Corruption and political instability continue to hinder progress. The rising crime rate adds another layer of difficulty for citizens already struggling with poverty. While international aid and loans offer some relief, systemic issues make long-term recovery uncertain. Country 5. Sri Lanka. Sri Lanka's financial woes came to a head in 2022 when the country defaulted on its $83 billion debt. The pandemic, poor economic policies, and reliance on debt financing pushed the nation to the brink. Rising global prices and dwindling foreign reserves have only worsened the situation. Poverty rates remain high, with nearly 26% of the population living below the poverty line. Inflation and reduced subsidies have made basic goods unaffordable for many Sri Lankans. The country's heavy debt burden continues to limit its ability to invest in recovery efforts. Despite some reforms, Sri Lanka faces significant obstacles in its quest for stability. Political instability and weak exports remain challenges, and the future looks grim without substantial restructuring. The struggles of ordinary citizens, including food insecurity and unemployment, highlight the depth of the crisis. Country 6. North Korea. North Korea has long been an enigma on the global stage, but its economy is no mystery, it's on the brink of collapse. The country's isolationist policies, sanctions, and mismanagement have led to a dire situation. GDP per capita remains one of the lowest globally, with most citizens living below the poverty line. Agricultural mismanagement and border closures during the pandemic exacerbated the already precarious food supply. Sanctions continue to choke trade, and the country's reliance on limited resources has resulted in widespread shortages. The regime's prioritization of military spending over public welfare has further alienated the population. With limited access to accurate economic data, much of North Korea's struggles are shrouded in secrecy. However, anecdotal evidence and defectors' accounts paint a grim picture of widespread poverty and malnutrition. Without significant changes in leadership and policy, North Korea's economic woes are unlikely to improve. Country 7. El Salvador. El Salvador's economic challenges are deeply tied to its reliance on external remittances and controversial policies like adopting Bitcoin as legal tender. Public debt has climbed to over 80% of GDP, leaving the government with limited resources to address domestic issues. The introduction of Bitcoin has created volatility in the financial system, with many citizens skeptical of its benefits. High poverty rates and limited access to essential services further complicate the situation. Nearly 27% of the population earns less than $5.50 per day, and economic inequality remains a significant hurdle. El Salvador's debt servicing obligations restrict its ability to invest in infrastructure, education, and healthcare. While the country's natural beauty attracts tourists, it's not enough to offset the mounting economic pressures. Without a more stable fiscal strategy, the nation risks falling deeper into financial trouble. Country 8. Bangladesh. Bangladesh, once hailed as an economic success story, now faces significant financial hurdles. The garment industry, which accounts for a large portion of its GDP, has been hit hard by international buyers canceling orders due to political instability and unsafe working conditions. This has led to widespread unemployment and economic stagnation. Inflation has soared, and the devaluation of the taka has further reduced purchasing power. Public debt is expected to grow significantly in the coming years, increasing the burden on the economy. Poverty rates are climbing, with over a quarter of the population struggling to meet basic needs. The government's efforts to stabilize the economy have been met with limited success. Rising social unrest and attacks on minority communities have further damaged the country's image, deterring foreign investment. Bangladesh's future depends on resolving these systemic issues and rebuilding trust in its key industries. Country 9. Belgium. Belgium, a nation known for its cultural richness and quality of life, is grappling with growing economic instability. Public debt exceeds 100% of GDP, driven by high government spending during the pandemic and rising interest rates. Unemployment rates are climbing, and inflation remains above the European average. Tax inefficiencies and a burdensome welfare system contribute to the country's financial woes. Belgium's population is aging, placing additional strain on its pension system. Rising costs of housing and services are further stretching household budgets. Despite these challenges, Belgium's infrastructure and social systems remain strong. However, without significant reforms to address debt and inefficiencies, the country's economic stability will continue to erode, leaving future generations with mounting financial burdens. Country 10. Myanmar. Myanmar's struggles are deeply tied to political instability and ongoing civil conflict. The country's economy has contracted significantly, with exports dropping by 13% and imports declining even further. Poverty rates exceed 30%, and the kyat has lost much of its value. Civil war and disruptions to trade have left the country in a precarious position. Factories face frequent electricity outages, and essential goods are in short supply. The lack of foreign investment has further weakened Myanmar's economy, leaving millions in financial distress. Efforts to stabilize the country are hindered by political divisions and widespread corruption. Without a resolution to its internal conflicts, Myanmar's path to recovery remains uncertain, with economic hardship continuing to affect its population. Country 11. Turkey. Turkey's economic challenges are rooted in high inflation, a depreciating lira, and unsustainable public debt. Inflation rates are among the highest globally, eroding citizens' purchasing power and driving up the cost of living. Unemployment remains high, adding to the financial strain on households. The government's unorthodox monetary policies have deterred foreign investors, further destabilizing the economy. Debt levels continue to rise, and confidence in the financial system is eroding. While Turkey's strategic location and vibrant culture attract tourists, the revenue is insufficient to offset its economic woes. For citizens, this translates to higher costs, limited opportunities, and declining quality of life. Without a shift in fiscal and monetary policies, Turkey's economic instability is likely to persist. Country 12. Lebanon. Lebanon remains a nation in crisis, with hyperinflation and a currency collapse devastating its economy. Public debt exceeds 150% of GDP, making it one of the most indebted nations in the world. Over 75% of the population lives in poverty, struggling to access basic necessities. The country's political instability has further hindered recovery efforts. Essential services like healthcare and education are underfunded, leaving millions without adequate support. Despite international aid, the scale of Lebanon's challenges makes recovery a daunting task. Lebanon's future hinges on resolving its political and economic crises. Without substantial reforms, the country risks further financial collapse, deepening the suffering of its citizens. From Venezuela's mismanagement of oil wealth to Lebanon's spiraling debt crisis, these 12 countries highlight the fragility of global economies. Each faces unique challenges, but the common thread is the impact on everyday citizens, who bear the brunt of these crises. Whether through reforms or external assistance, their paths to recovery remain uncertain.